I've been studying Lemonade's earnings report and call transcript for the last few days and want to point out some important details and explain why I'm still holding and even buying Lemonade, even though it's near an all-time low. If you're like me, you may have bought shares of Lemonade at over $100 a share and be wondering if it's even worth holding on to. Well, it's painful to watch a stock you own go lower and lower and lower. It's foolish to sell just because it went lower. People often buy stocks simply because they are going up, and people often sell stocks simply because they're going down. Neither of these scenarios makes any sense. The thing about Lemonade is the thesis hasn't changed. It's still intact and on track, which basically means the risk is similar or still the same. The company could, of course, go bankrupt, but the reward side of that risk-reward ratio is now much, much higher. Let's dive into the logic. If you get value out of this, make sure to subscribe, like, and comment down below. If the Lemonade thesis long-term is correct, this stock has 100x or more potential, and you'll want proof in these comments that you were following the journey and thinking critically, even when the market was at the lowest of lows. So make sure to drop a comment down below if that's you. First off, how is the thesis intact? Well, they're still delighting customers. That is true. In-force premium and premium per customer are still growing steadily. That is true. They have fast product development and rollout. That is true. And they still have rapid administration and efficiency in the organization. That is also true. All these parts of the thesis are still intact, but there's a couple parts of the thesis that are still playing out. In theory, as Lemonade offers more products in more markets and as existing customers get older, they should get more premium per customer and less customer churn. But the thing is, we really don't have enough data to know for sure if the above will come true or not. Say Lemonade Car is a big piece of the puzzle, but it's only in 2 states. 2 states, that's it, Illinois and Tennessee. But soon, CAR will be US-wide, and then after that, we'll have significant data to test the thesis. And by Q4 of this year or Q1 results of next year, we should have a pretty good idea whether the bundling of CAR is having a big impact. And the opportunity is massive. Truly massive. See, on the call, Daniel pointed out that the existing customers are spending about $1 billion on car insurance. So existing Lemonade customers are spending $1 billion elsewhere. And the U.S. auto insurance market is itself over $300 billion. A huge, massive opportunity. So we need more time before we can really judge how effective their bundling will be. So we have to wait, and in my opinion, it's very much worth the risk reward at this price, considering the stock is close to the company's cash and investments value. There's also one critical part of their thesis that we're still waiting on: their loss ratios. Theoretically, they should be able to have better and better loss ratios as they weed out poor customers in their first years and then get good customers who stick around and have better and better loss ratios over time. This is one detail that Shai pointed out on the earnings call. And one way we would know sooner as investors if their loss ratios are actually improving and as customers and products mature would be if they showed us the loss ratios by product over time. I asked for this on the call. I was excited by this part of Daniel's answer where he said he does expect they would have an analyst or investor day and share more information about their AI, but I was a little bit disappointed about the rest of his answer where he kind of skirted around the answer and said they wouldn't want to share too much information because that would be a competitive disadvantage to their competition. But really, I don't think sharing loss ratios on a product-by-product basis really is revealing any Lemonade secret sauce to the industry. So unfortunately, to test these parts of the thesis, I think we're going to have to wait at least a little bit longer till the end of this year. But at least it makes sense from a logical perspective that people love their products. People tend to bundle insurance together. Customers that start as renters or with simple products tend to buy more products over time, and customers mature and have less life changes and ultimately should have less churn and less losses over time as they become more responsible, more mature individuals. And bundled customers offer Lemonade more data, which should help their underwriting as a whole. So in conclusion, where am I at with Lemonade stock? Well, I think the thesis hasn't changed, and some parts of it we're still waiting on, but really has not changed. And right now, the market cap is roughly equal to their cash and investments, so it's really dirt cheap right now. I would argue. And it's still a small part of my portfolio, but I'll be adding at these lower levels. And we'll be watching Q4 numbers of this year very closely, and of course Q1 of next year very closely as well. So hopefully we can prove the rest of the thesis correct, and this stock can really take off. Risks I'm seeing with Lemonade, number one is their loss ratios don't improve and their models are wrong. That's a major risk and certainly a possibility. And then there's no fixing that. That's a fundamental error with the company, and I would certainly sell if I thought that was the case. Also, there are cash concerns. I've seen some people discussing this online, worried about their cash situation. Are they going to have to raise money in this environment? For me, this is not a major concern because I think they'll have more than enough cash to determine whether the thesis is correct or not before they would ever have to do an equity raise. And I'm going to actually do a separate video where I look at their cash runway to address this concern in more detail. So make sure to subscribe to get notified of that upcoming video. If you enjoyed this video, make sure to check out this other one on Lemonade's Q1 earnings report, and subscribe if you enjoyed this. Remember, it's in the bag.